Gold stock investors have been going crazy lately. You see, the gold price has been extremely strong and is trading close to all-time highs, yet the share market performance of gold stocks has been extremely underwhelming. However, this potentially provides an amazing opportunity to buy quality gold stocks at undervalued prices if gold goes on to start a new boom period, as many people believe it will. I'm Biko Konstantinos, and that's what we're going to talk about today. There's nothing worse than investing into a sector, seeing everything go as you hoped, but not seeing the investment performance that you expected. Well, actually, there's heaps of things worse than that, but it is annoying. And if you've ever been annoyed in your life, why don't you give this video a like? And I definitely wouldn't be annoyed if you click that subscribe button. We can consider the merits of investing opportunities together. Now, I'm not recommending investing into the gold sector, but I am going to look at the landscape for gold and precious metals and the potential performance of gold stocks. Here's a chart of the gold weekly. In 2020, gold reached an all-time high around 2075 US, then retested that same high in 2022, and after a sharp decline, another retest just a month ago. So we've got a triple top over the gold price. And you know what they say about triple tops? I don't actually know what they say. I know they say third time's a charm, but it didn't happen in this case. So since the third attempt didn't work out, I'm changing it to fourth time's a charm. If gold's fourth attempt to break out to new all-time highs fails, gold bugs are gonna flip out, and we don't want that. But seriously, the gold price is trading very high, above 1900 US, and if we draw a straight line from the highs of 2011, we can see that gold's still trading above those levels. But will buyer demand stay strong enough to push gold through to new all-time highs? Or is this triple top the end for gold? So gold in the 1900s is very strong. So you'd think gold stocks would be riding high due to all of that gold price strength and increased profitability, but you'd be wrong. Their performance has been pretty dismal, I must say. Looking at the GDX VanEck Gold Miners ETF, we can see after COVID that gold stocks did surge, but ever since then they've been downtrending. And we can see that recent levels are actually the same as they were before COVID hit. So all those lockdowns, crazy stimulus, pumping trillions into the economy and surging national debts, and now crazy inflation with some of the sharpest interest rate hikes we've seen in our generation. With all of that, gold stocks are just trading here. Could this be an opportunity? So if we look at the GDX over gold ratio, this chart shows us if the GDX or gold stocks are stronger relative to the gold price or weaker. So these spikes on the chart is where you could say that gold stocks were outperforming the gold price itself, but these lows show us when gold stocks were underperforming the actual physical gold price. So you can see gold stocks have gained a little bit against the gold price, but really their performance relative to gold is pretty much at all-time lows and only been seen a few times over the last 15 years. This is what it looks like when we compare actual gold price to the GDX. So over that same period, we can see how gold has massively outperformed the GDX representing gold stocks. Now, what's the reason for this? Considering that the gold prices are elevated, so gold producers are getting a lot more money for each ounce of gold that they sell? Well, there could be multiple reasons. Costs to produce gold have increased dramatically over the last couple of years, so expenses have been rising, which could be having an effect. But more likely, we just don't look to be seeing massive investor demand for gold stocks at the moment. I get the feeling that the investment community doesn't really believe that gold is going to reach all-time highs in the near future, and because of that, they don't seem to be too fussed to try and build large positions into gold at this stage. That's just my thoughts. Historically, when we have a real major gold boom, it's normally led by gold stocks, and that means you'd normally see gold stocks out outperform the actual physical gold price at the start of a true new bull market. And perhaps that's why gold's last attempt at a new all-time high failed to break resistance and ended up falling back again. It could pay great dividends to keep a close eye on these charts, and if we start seeing gold stocks rise much larger percentages than the gold price, we may be just about to commence a new gold bull market, and that's when gold stocks can really take off. Some gold producers have risen many multiples during those sorts of bull markets. Now, another interesting factor is that investment into gold and other precious metals is such a tiny portion of the entire stock market investment values. This interview explains how current investment into the sector is quite a long way below the long-term averages.
The market share of precious metals and precious metals related securities in the United States is less than 0.5%. The 4-decade mean market share is 2%. I believe that negative real interest rates, quantitative easing, debt and deficits combined will at least propel gold's market share to the 4-decade mean. If that's correct, demand for precious metals related assets will increase fourfold, which is precisely what I think is going to happen.
So I think what this means is that there's a lot of room for increased investment into gold and precious metals, and a fair bit of that could go into gold stocks, especially if a new bull market commences. So just consider if some of that massive global investment money is suddenly directed towards gold and gold stocks, how explosive some of the upwards moves could be in the future. Now, central banks around the world have also been investing into gold at record levels. So we have to ask ourselves, what does central banks see that would cause them to start buying gold at greater levels than any time in the recent history? Iraq just increased their gold reserves by 2% in just one day. Considering that central banks have gotten the world into this predicament with their ultra-loose monetary policies, I think they know that the global economy is in for trouble ahead, and they're trying to take out some insurance by buying up gold. Now, I touched on it before, but the global economy really is in some trouble because the sharp interest rate hikes have yet to really make an impact. Economies are still on that unicorn high from all the crazy post-COVID stimulus, but we're seeing signs of trouble ahead, especially when you see the state of consumer savings in the US as well as credit card debt. You know that all is not well, and the fact that central banks are still raising rates, now higher than pretty much anyone first expected, I think it's only a matter of time for some real pain to be felt. Now, if we look at the stock market, both the Nasdaq and the S&P 500 have been buoyed lately by crazy surges in AI related stocks. However, looking at the Dow Jones, we could see the price has been trading sideways and hasn't been able to break above this resistance level. Now, if we look at the Russell 2000 Small Caps Index, its recent price has been even weaker. Now, when the markets are super confident, they bet big on the small end of town, like we saw here with the Russell 2000 after COVID. But we're not seeing that exuberance or wild speculation on the Russell at the moment, which is another signal to me that stock markets could start to break down in the near future. And if they do break down, the gold price and gold stocks could start to fall a little bit with them. But historically, gold and gold stocks will start to outperform the broader market as it continues downwards. So the gold price is strong, gold stocks look to be undervalued. So what could you buy if you thought that gold stocks were due to start outperforming? Well, of course, individual gold stocks can do exceptionally well, but it is much higher risk investing in individual gold producers, so you really have to do your research. Now, ETFs like the GDX can provide a good option if you wanted to spread your risk over a number of gold stocks. Typically, in a gold bull market, the first gold stocks to start outperforming are the largest ones, and those are what's covered in the GDX. However, after the initial run of the biggest gold stocks, you'll then see more investment, more speculation enter the bull market, and attention would start focusing on some of the gold juniors. And most juniors might fall into the explorer type category, so they're much higher risk. But VanEck does have a junior gold miners ETF known as the GDXJ. So you can see here in the previous boom, the GDXJ went higher than the GDX went, but it also fell lower. lower. So it's a lot more volatile. It's not for the faint-hearted, but gold juniors can do extremely well, especially when you're in the midst of a strong gold bull market. So is investment into undervalued gold stocks gonna make some people rich in the next gold boom? I'm Biko Konstantinos.